Hello, everybody. Welcome to AfriVest, where we analyze equities on the African continent. Today, we will be having a look at Naspers Holdings, a South African company. This presentation delves into Naspers market strategies, financial performance metrics, and future growth prospects in the dynamic digital economy. In-depth analysis of Naspers, an in-depth look at investment viability. Financial metrics evaluation, assess Naspers' financial health using key ratios and trends. SWOT analysis, identifying strengths, weaknesses, opportunities, and threats. Business operations overview, analyze Naspers' business model and core operations. Risk assessment, examine potential risks associated with investing in Naspers. Investment strategy insight. Explore investment strategies applied to Naspers. Historical performance review. Review Naspers' historical performance trends over the years. Market position analysis. Evaluate Naspers' position on the global market. Future outlook. Provide a forecast of Naspers' future growth potential. Introduction to Naspers. Key highlights of Naspers' evolution. Global research. Naspers operates in over 120 countries, showcasing its extensive international footprint. Investment portfolio. The company boasts significant investments in e-commerce, classifieds, pay TV, and online gaming. Historical background. Founded in 1915 as a newspaper publisher, Naspers has evolved significantly over the decades. Notable products. Key products include Take a Lot, OLX, and MultiChoice, demonstrating its diverse offerings. Media conglomerate. Naspers has transformed into one of the largest media conglomerates worldwide. Strategic investment. Naspers' early investment in Tencent has become a cornerstone of its financial growth. Methodology. Approach to analysis. Evaluating Naspers as a potential investment. 10-year revenue growth requires a consistent annual revenue increase of at least 10%. Enterprise size requirement. Target companies should exceed enterprise size of 2 billion rand. Price to book ratio evaluation. Evaluating the price to book ratio for investment potential. Dividend history. Assessing stability and history of dividend payments. Financial ratios assessment includes the current ratio, PE ratio, and debt asset ratios. Financial performance of Naspers. Key financial metrics and growth insights. Consistent revenue growth. Naspers has shown over 10% annual revenue growth on average for the past decade. Revenue growth data source. Financial data can be referred from macro trends for detailed analysis. 10-year revenue record. This record indicates sustained operational success and market strength. Robust operational performance. The growth metrics reflect Naspers' strong market presence and successful strategies. Current market capitalization. Naspers' market capitalization stands at 76.52 billion rand, significantly exceeding the 2 billion rand threshold. Dividend analysis of Naspers. Understanding dividend strategy. Dividend yield. Naspers exhibits a relatively low dividend yield due to prioritizing growth investments over payouts. Dividend history. While dividends are distributed, the focus remains on investing in core business functions. Strategic vision. The approach aligns with Naspers' identity as a growth-oriented company, emphasizing long-term value creation. Market capitalization and size of Naspers. An overview of key highlights. Significant market capitalization. Naspers holds a market cap of 776.52 billion rand, underscoring its industry performance. Global operations. With operations in over 120 countries, Naspers plays a vital role in the global digital economy. Enterprise size. The enterprise size exceeds 2 billion rand, meeting a crucial benchmark for industry leaders. Investment capability. Naspers' substantial size enhances its resource allocation investment opportunities. Financial ratios of Naspers. Key metrics analysis of financial ratio. Current ratio. Naspers has a current ratio of 4.64, showcasing strong liquidity well above the minimum requirement of 2. PE ratio. The PE stands at 3.25, significantly lower than the average of 15, indicating potential undervaluation relative to growth. Debt to asset ratio. With a debt to asset ratio of 0.51, Naspers maintains a manageable level of debt, supporting financial stability. Naspers investment portfolio. Key investments and strategies. Diversified investment strategy. Naspers employs a diversified investment approach through its subsidiary process to reduce risk. Substantial stake in Tencent. Naspers holds a significant stake in Tencent, a leader in technology and digital services. Global footprint expansion. Investment in Mail, Rue, Delivery Hero, and Auto broaden Naspers' global reach and market presence. Process spin-off for growth. The strategic spin-off processes facilitated focused growth and enhanced shareholder value. Risk mitigation. Naspers' diverse investments help mitigate risks associated with market volatility across sectors. Capitalizing on growth opportunities. The portfolio structures allows Naspers to capitalize on emerging growth opportunities in various sectors. Naspers' strengths and challenges. Evaluating Naspers as a long-term investment. Strong brand recognition. Naspers enjoys a robust reputation across various sectors, enhancing customer loyalty and market presence. Dependency on Tencent. Naspers is heavily reliant on Tencent since exposes it to risk associated with fluctuations in its market performance, potentially impacting overall profitability. Innovative investments. The company's early investments in high-growth firms, particularly Tencent, have positioned it favorably for future growth. Market investment. The current volatility in investor confidence towards tech stocks can create challenges for Naspers, affecting its stock performance and investment appeal. Investment analysis of Naspers. Compelling investment opportunity. Naspers showcases robust revenue growth and a solid financial foundation. Strong revenue growth. The company has demonstrated impressive growth metrics year on year. Solid financial ratios. Naspers maintains strong performance indicators reflecting stability. Diversified portfolio. Investment across various sectors mitigates risks associated with market fluctuations. Risks to consider. Potential investors should be aware of market dependencies and risk. Market dependencies. Naspers is sensitive to shifts in market conditions that may affect growth. Fluctuations in tech investments. As a tech-heavy investment, Naspers can be impacted by volatility in the tech sector. Strategic positioning. Naspers has established a strong market presence through a strategic investment. Historical performance. A review of Naspers' past performance shows resilience and adaptability. Alignment with defensive investing principles. Naspers aligns well with defensive investing, appealing to risk-averse investors. Hello, investors. This is Mduduzi here. Today we're going to talk a bit more about Naspers. Now, Naspers is a very interesting case study. It is commonly referred to as a or sometimes a bit of a fintech, but more commonly as an e-commerce company. But I would rather sort of differ from that opinion of Naspers and say that it's more of a venture capital than an e-commerce. Although e-commerce let us acknowledge that that's where they've made their name. Now, The reason for that is that while they are considered as an e-commerce company, they haven't. I don't think that their operational track record has been sort of a stellar kind of performance. If you look at the likes of OXL, um, Take a Lot, they're doing relatively okay, but I mean, it's nothing astounding. Um, you know, multi-choice is rumored to be facing issues of solvency, which was spun out from Naspers. Now, typically, when you spin out a company, you do it because, as a parent company, you think that they have the ability to stand on their own and in fact grow, and that's why we see it as one of those critical steps for creating value for investors through unbundling that company from its parent company, because we think that it has a lot more value which can be discovered. But just besides that, if you focus on their sort of investment track record, they've done phenomenally well. Like, we all know about the investment in Tencent, Flipkart, and there's like, if you really look at how they've gone about in most of those 120 locations that they are that they have a presence in. I don't want to say operating in, or have a presence in. They've sort of done an incredible job in investing in great companies in those territories, and that has been quite a source of phenomenal growth, as indicated in our presentation earlier, that they've had a phenomenal stellar growth of over 10% annually in terms of revenue. The one challenge that I would say I would highlight with Naspers is because Tencent is still such a big component of their portfolio. The question becomes, at what rate will they actually be diversifying away from Tencent? As they are Chinese, and the thing with Chinese stocks is that they have a challenge that they exist within a communist country, and so now I'm veering a bit into politics here, but the problem becomes that if you're existing in a communist country, the legitimacy of governance is generally derived from economic performance, and so when that economic performance is not coming through for the government, and they perceive any threat from any other corner, they can come in and clamp down against companies, which is what happened with big tech, some couple of years back, just after COVID, with Jack Ma's comments against the communist government in China, and sort of the fallout that happened from there. So, that I see it as a bit of a risk. But having said that, they have some massive tailwinds. I think if you look at how they've sort of spread the diversifications around the world, the different markets, both emerging markets and sort of developed markets that they operate in, they certainly have a huge amount of potential. I would say, again, reminding you that this is not investment advice, this is an educational program, but I would say, in terms of sort of looking at it as an investment, would I do it now? I mean, if I'm going to do a dollar averaging cost strategy, or rand average cost strategy, which is you're going to put in something every month, it's worth looking at right now. But if you're looking at it as sort of, you want to put in a once-off cash pile in it, I wouldn't go into it right now, just because I think with the kind of bubble that we're in now, specifically the United States, so South Africa itself, I wouldn't say we're in a bubble, but because of what is happening in the United States, you sort of have equities generally across the world having been lifted up from their sort of medium prices, which in an event of correction, and I believe that a correction is going to happen. I just don't know when. If you look at the US stock market trading at about, I think, something 35 to 40 PE ratio. Um, Specifically the S&P 500. But with that, I think, like I said, a correction would happen. But and if it were to happen, developing markets get punished quite severely during that period. So you would see a significant readjustment of Naspers too if that were to happen, and we were to experience an economic crash. But another interesting thing that I would like to promote to you guys is this is a great book. It's called Non Bullshit Innovation by David Rowan. And in here, the story of Naspers is covered extensively. They cover a series of companies which actually look to innovation as a way to both survive but also thrive. And so the story of Naspers is really, it's a short piece here, but it's written out well about how this company looked to innovation, to as sort of how they emerged from evolving from a newspaper kind of company to the e-commerce that they're known to, or rather venture capital firm. That's how I like to think about them today. But this is a great book, and it's a great read, along with our own